So, welcome to this virtual workshop series offered by the University of Kentucky's Office of Work Life. Today, we will be talking about navigating your student loan repayment. And we have a guest speaker with us from Savi today, talking to you guys about this topic and offering some wonderful tips, suggestions, and all you need to know. So, welcome, Jobe McDermott.
Hello, and thank you for having me. My name is Jobe. I'm the Senior Associate of External Affairs with Savi, and I'm really excited to be here today to help you all understand a little bit more about the basics of your student loans and talk about how Savi can help you hopefully find some savings and prepare for those payments to resume starting next month. So for those of you that are new to Savvy, a little bit about us. We are a public benefit corporation, and we started about 5 years ago to help borrowers just like you all. We are run by experts and advocates in the student loan industry that have over 2 decades of experience. Many of us also have student loans of our own, myself included, so we have that firsthand knowledge that helps us to better serve you. And finally, we are focused on savings. It really is our goal to help you make these loans more manageable through programs like income-driven repayment plans and public service loan forgiveness, which I'm going to talk about in more detail coming up soon. So by the end of this session, you will leave knowing what federal programs are available to help you out, how we can help you take advantage of these programs, and what you need to do to get started today. So first, a quick overview of the two programs that are available for borrowers. There are public service loan forgiveness and income-driven repayment plans. At Savvy, we focus mostly on public service loan forgiveness, since this is a program that can forgive your entire remaining loan balance after you've met the requirements. So under public service loan forgiveness, or PSLF as we call it for short, eligible public service employees can receive full loan forgiveness on their remaining balance after they've made 120 payments on their loans. So after you've worked in public service and made payments for about 10 years, whatever balance you have left will be forgiven. This is available for anyone working in the public sector with federal student loans. So one thing just to note is that these are federal programs that require you to have federal loans. As long as you have loans from the federal government or the Department of Education, those will qualify. Other loans that you may have, like private loans from companies like maybe SoFi or Discover, unfortunately won't qualify for these programs. The other program that we can help with that helps with repayment are income-driven repayment plans. These are affordable monthly payments that base your monthly payment on your income and your family size. So for most borrowers, they are a more affordable option since they aren't based on your loan balances. Income-driven repayment plans also have a forgiveness option, which is a great backup for those of you who maybe don't qualify for PSLF. So after you've paid on your loans for 20 or 25 years on an income-driven plan, that remaining balance can also be forgiven. So that's the kind of high-level overview of both of those programs. Let's take a deeper look at each of them. That way you understand kind of all the details of them. So first up, those income-driven repayment plans. There are 4 different plans that are available: Save, Pay, IBR, and ICR. Each one of these has a very similar name, and even I mix them up sometimes. But what you need to know is that each of these plans bases your monthly payment on your income and your family size. Depending on which of the plans you are enrolled in, your payment could be anywhere from 10 to 20% of your discretionary income. So for example, say that you're single, you have no dependents, and your income is $52,000 a year. You could expect to see a $270 per month payment on an income-driven plan. The great thing about these programs is that they are designed to be affordable. So I mentioned that discretionary income. The Department of Education has some pretty specific calculations they run where they compare your situation, your family size, to the federal poverty level for your situation. This helps them take into account all of the things like bills, mortgages, cost of living, all of those essential costs. After they've factored out all of that, the money that's left over is considered your discretionary income. So these payments aren't based on your total income. They're based on only the leftover amount after taking those bills into consideration, which helps them to be affordable for most borrowers. I mentioned that there's a forgiveness option available through these repayment plans. So depending on which of the plans you're enrolled in, you'll have a repayment period of 20 or 25 years. After you've paid for that amount of time, if you still owe a loan balance, it can be completely forgiven, including interest. So these are great ways to have a low, affordable monthly payment and get some forgiveness down the line. If you receive this forgiveness before 2025, it is tax-free. After that, though, it will be considered taxable income for the year that you receive that forgiveness. Also, while enrolled in these programs, you are required to update your income once per year. That way, if your income is changed, your payment can be adjusted so it stays at the 10 to 20% range. This can be done online or by calling your loan servicer, and we encourage you to keep your records, that way you know when those dates are. So that's the first program, income-driven repayment plans. The second program, and the one that we'll focus on the most, is public service loan forgiveness. Under public service loan forgiveness, there are several requirements that you do need to meet in order to qualify. The first is that you need to work in public service. So a public service qualifying employer is a government organization at any level. This can be federal, state, local, or tribal. If you don't work at a government organization, you can also work at a not-for-profit 501c3. So as long as you work for a government organization or a nonprofit, you're meeting that first requirement and you could qualify for forgiveness. The great thing is that the University of Kentucky is considered a qualifying employer, so all of you here could qualify for loan forgiveness. It's important to note that there is an additional requirement where you need to work at least 30 hours per week. For public service loan forgiveness, they require you to work full-time, and their definition of full-time is an average of 30 hours a week. For those of you that are working part-time below that, you can still qualify. If you are working for multiple qualifying employers at the same time, you can combine that employment so that you can reach the 30-hour threshold and qualify as well. So that's requirement number one. Requirement number two is you need to have the correct loan types. For public service loan forgiveness, only direct federal loans qualify for this program. So right now, the loan type offered by the Department of Education is a direct loan. If you have an older loan, like a FFEL loan, or if you have a Parent Plus loan, which is a loan you took out to pay for your child's school, those loans need to be consolidated so that they can convert to direct. So a little bit tricky, a couple extra steps there for some borrowers, but it's important to check that you have direct loans. That way you have the right type and you can enroll in this program. Finally, requirement number three is to pay your loans on a qualifying repayment plan. So for PSLF, they require that you make your monthly payments on an income-driven repayment plan. Anyone can enroll in an income-driven repayment plan, and you can pay on those without being enrolled in public service, loan forgiveness. But if you do want to pursue this program, it is required that you enroll in one of those four plans and make your monthly payments. Be sure to pay them on time and for the full monthly amount to ensure that they qualify. So at this point, some of the common questions you're probably thinking are, well, how do I know if my employer qualifies? The easiest way to do that is by creating a Savi account and adding your employer to that account. Whenever you add your employer to your Savi account, we will check to see if they meet the requirements for PSLF. And if they do, we will let you know. It's important that you add all current and past employment to your Savi account because you'll only get credit for employers that you have certified. Whenever you add all of your employers to this page, we'll be able to take a look at your entire employment history and get an accurate estimate of what employers count and how many payments you could have towards those required 120 payments. Next most common question, how do I know if I have the right loan types? You can also check this in your Savi account. We've made it really easy to add your loans. All you need to do is sign in with the same username and password as your online servicer, and we will take a snapshot of your situation and pull those loans over into your Savi account. We like to clarify here that Savi is not a loan servicer, and adding your loans on this page does not take any action on them yet. It just lets us see your situation. That way we can help get you those estimates of what you qualify for. We'll be able to see your repayment history to know your progress towards forgiveness. We can check your loan types to make sure that you have those direct loans. And if for some reason you don't have direct loans, we also will identify that and help with the consolidation process to get them converted to direct and get you on track for forgiveness. So that's a quick overview of the main programs we help with. Let's spend a moment talking about payments resuming, since this is perhaps the most important thing affecting borrowers right now. Payments have been paused for over 3 years, but a recent bill that was passed put into law that the payment pause had to end. So last week on Friday, interest resumed on all federal student loans. This means that if you have federal student loans, interest is accruing on them again. Payments will be due starting in October. So now is a great time to start thinking about these loans and taking those steps to make sure that you're prepared. Your student loan servicer will notify you of both your payment amount and your due date very soon. We encourage you to confirm who your loan servicer is and make sure your contact info is up to date at studentaid.gov. That way, your servicer can reach you with those important updates. Something else to note is that time during the payment pause will count towards public service loan forgiveness. So normally you have to be making payments on your loans in order to earn progress towards those required 120 payments. But because the payment pause is a special situation, they are letting you count those paused months as if you made a payment. So the way this works, going back to March of 2020, for every month that payments were paused and you were still working in public service, you can count that month as if you made a payment. So by the time payments resume next month, eligible borrowers could get credit for over 40 free PSLF credits. That is almost a third of the way without having to pay a dime, meaning this time is helping you get closer to forgiveness and get more forgiveness. All you need to do to get credit for this time is submit the normal PSLF application, which I will talk about soon. Whenever you turn in that application for your employer, they will certify that you've been working in public service and you will get credit for all the months during the payment pause. How should you prepare for those payments to resume? Remember, we encourage you to confirm your contact info is up to date at studentaid.gov and also check who your servicer is. That way, you can be on the lookout for those important notifications. We also encourage you to check your repayment plan and your payment amount. That way, you know if you are on a PSLF eligible plan and what your payment is going to be. If you are not and you need to take some action on your loans, you can use Savi's personalized repayment calculator. That way you can get enrolled in an income-driven plan and have a lower monthly payment when those due dates roll around. Last policy update to let you know about is that a new income-driven repayment plan is now available. So recently, the Department of Education released a new plan called the SAVE Plan, helping to lower monthly payments for borrowers across the country. They're splitting the implementation of this up into 2 phases. So right now, some of the benefits are available. The biggest one, I think, is that unpaid interest will be covered on this plan. As long as you are enrolled in the SAVE plan, making your minimum monthly payment, if that payment does not cover all the interest, the Department of Education will cover the rest of it for you. This helps ensure that your loan balances are never increasing. So that is number one and perhaps the biggest benefit of the plan right now. Also under the SAVE plan, they are changing how they calculate your discretionary income. So if you remember when I were talking about those income-driven repayment plans and how they account for all of the essential costs, they're changing the calculation to help include less of your income towards this plan. Basically, what this equals out to is that no one hour or less will have a student loan payment. For borrowers that are making more than that, you will still see your payment reduced since less of your income will be included when calculating your payment. So those are the benefits available right now. Next summer, they will implement the rest of this plan, which will help further lower payments. So if you have undergraduate loans, starting next summer, your payment will only be 5% of your discretionary income. If you have grad loans, it will stay at 10%. For those of you with a mix of grad and undergrad, you'll pay somewhere between 5 and 10%. So borrowers with undergraduate loans will see additional savings next year. They're also updating the forgiveness timeline. So if your original loan balance was $12,000 or less, your forgiveness timeline will only be 10 years rather than 20. And that is specific to that income-driven forgiveness. So more savings coming next year, shorter timelines to forgiveness. But the big thing to know is that some benefits are available right now, and you can enroll simply by completing your main Savi application. So once you have entered your information and you see what you qualify for, we'll be able to help you enroll in the SAVE plan. That way you can have an affordable payment before those payments resume. All right, I know I just dumped a ton of information on you, and as you've seen, these programs can be really helpful, but also confusing. Specifically for PSLF and IDR plans, the programs are bureaucratic, and you may find it difficult to figure out the best option on your own. How do you make sense of this? Luckily, this is where Savi comes in. So TIAA, Savi, and the University of Kentucky are all working together to help you find the best outcome for your loans. Working with Savi, you can help make managing your loans even easier. We help simplify and digitize the entire process for enrolling in these federal forgiveness programs. Working with Savi, you can reduce your student loan payment by an average of $150 a month. And on average, our users qualify for about $20,500 in forgiveness, so some pretty substantial savings. One of the biggest benefits is that we just have one application for you to complete. After you enter your information, you'll see personalized options that are custom tailored to you, showing you your eligibility for all of the programs that we've discussed so far. So once you have access to your Savi account, this is the main dashboard where you will be able to see an overview of everything that you are working on with us. One of the features of the dashboard is that you can invite friends and family to use Savi. So a lot of you may have friends, family, colleagues, children, anyone you know that may have student loans of their own. Savi is also available to them. So if you are listening to this presentation and you have someone in mind that you think could benefit, you can enter their email and they'll get an invite so that they can sign up for Savi and get help as well. So what does this all mean for you? In this example, you can see that without Savi, you might not know about loan forgiveness programs. You might be paying more per month than you need to and paying more overall. But with Savi, we'll help show you all the options available. That way you can get that forgiveness, have the lowest possible monthly payment, and pay as little as possible overall. This is what that looks like in your Savi account. Once you've entered all of your information, we will show you exactly what you qualify for. You can see what income-driven repayment plans are available and what your monthly payment would be on each one of them. You can also see how far along you are towards forgiveness and how much total forgiveness you can receive. We will check all of the options and we will automatically show you the plan that will save you the most and get you the most forgiveness. But if you wanted to see everything you qualify for, you can always click Show More Plans. That way you can see every option that is available to you. It is absolutely free to enter your information and see what you qualify for. So you can get started today at no cost to see what is available to you. If you'd like to unlock all the features of Savi, we do have a premium membership called our Essential Membership. This membership is $60 per year and unlocks all the features of Savi. By being an Essential member, we'll be able to create your applications for you digitally, and we will take care of submitting them to your servicer to make this process as easy as possible for you. We'll also monitor your loans and keep you on track for forgiveness moving forward. That way you can ensure that every payment you're making is counting towards forgiveness and you're getting that forgiveness as soon as possible. And best of all, you can receive personalized support from the student loan experts at Savi. Anytime you have questions about a plan that you qualify for, you want to discuss your situation, you can reach out to our support team where we can provide you with that one-on-one help to help you make informed decisions about your loans. So here you can see what it looks like when you are creating those applications with Savi. Believe it or not, the number one reason that applications are denied is because they're filled out incorrectly. It's not because you don't qualify for the program, it's simply because there was an error on the form. By being a Savi Essential member, We will create these forms for you and pre-fill them to ensure that they are completed correctly and have the best possible chances of being accepted. You can see what that looks like in these screenshots. On the left, you can see what it looks like when you are creating your PSLF applications. So the way the PSLF application works is you send a form to your employer and they sign it saying that you work in public service. When you turn that form in, you'll then get credit for all the payments you've made at that employer. You need to turn in a form for each one of your employers. So Savi helps with this by taking care of creating the form, sending it to each of your employers, and getting it signed by them. Once it's been signed, we will then submit it to your servicer. That way it can be processed and you can get enrolled in PSLF. Same with those income-driven applications. We pre-fill the application and we will take care of submitting it to your servicer to enroll you in your selected plan. So with the Essential membership, submitting these applications has never been easier, and you can get enrolled in just a few clicks. After you have created all of those applications, you'll be able to track their statuses on your dashboard. You can see the status of each one of your forms, knowing what step it's on and what steps are still needed to get it to 100%. As you're working through the application, if you have questions, we are here to help. Anyone can reach out to our help center to see articles on common student loan topics, frequently asked questions, and even videos that walk you through completing our application. If you are an Essential member, you will be able to reach out to our support team where you can get that one-on-one personalized help. And finally, we just launched a brand new call center. So feel free to give us a call weekdays from 9 to 5 to get your questions answered in real time. Alrighty, starting to wrap things up, I will leave you with some next steps. Be sure to scan this QR code, that way you can create your Savi account. Complete your application to see what you qualify for, and we encourage you to start on this right away. That way you will be prepared for when those payments resume very soon. If you have any questions along the way, don't hesitate to reach out for support, as we are always here to help. So thank you so much, everyone. I really appreciate your time and letting me attend, and I'm looking forward to working with you all.
Thank you so much, Job. We appreciate you being here and sharing all of this wonderful information with us today. We do have quite a few questions in the chat. Are you able to see the questions and answer some of them?
Yes, I can. Let me open that up and I will start taking a peek to get some answered.
Thank you.
So first question, someone says, do all 120 payments for PSLF have to be paid on those income-driven plans? What if I made some payments on the wrong plan? So right now, there is a temporary opportunity to get credit for past payments. They will be conducting account adjustments starting in early 2024, where they will give you credit for payments that were made on the wrong repayment plan. So if you're not already enrolled in an income-driven plan, it's not too late to qualify. Once those account adjustments happen, you'll be able to get credit for the payments you've made in the past. We encourage you to enroll in an income-driven plan now. That way you can ensure that all of your future payments will count towards forgiveness. Next question, and something that we see pretty often, unfortunately, is that you may fill out an application for PSLF and you never heard back or you don't know what the status of it was. That is one of the benefits of working with Savi, is that we can help you check the status of those applications. And if anything is wrong and maybe they weren't processed, we can help you create new ones to get those submitted and get enrolled. Unfortunately, we do see issues with servicers sometimes where applications will be wrongly denied, never processed, whatever it may be. But by working with Savi, we'll help monitor those applications submitted. That way we can make sure they are successfully processed, and we will work with you and your servicer to correct any issues. So if you've already applied for PSLF in the past, I would still encourage you to start this Savi application. We can check what you've already done, help do any necessary steps, and keep you on track moving forward. How long does it take to get an update once I've submitted my form? So it depends on which of the forms you're turning in. For an income-driven application, those usually process in 4 weeks or less. For PSLF, those ones take a little bit longer. Once you've turned in your PSLF application, it can take up to 12 weeks to hear back with the results. So for those ones, be prepared to sit tight and wait a little bit longer for those results. How is discretionary income calculated? So the Department of Education has a complex formula where they compare your income and family size to the poverty level for your area. They then will run the numbers to set aside amounts of your income to cover all of the essential costs like bills, mortgages, etc. That leftover amount is the discretionary income. They are complex formulas. I don't even know them off the top of my head, but that is the benefit of Savi, is that when you enter your information, we'll accurately calculate that discretionary income to estimate what your payment would be on an income-driven plan. That way you know exactly what you would pay if you enroll. I already applied for PSLF. Will Savi be able to see that? Yes. So if you've already applied for PSLF, we can see where you are at so far, pick up where you left off, and then moving forward, we'll help keep you on track to ensure that all future payments and everything can count towards forgiveness. Another great question. Someone says that I'm in pay right now, but I want to figure out if I should apply for save or stay with pay. That's another benefit of Savi. On that results page, we will show you every income-driven plan that you qualify for and show you what your payment is on each of those plans. So if you're already on an income-driven plan and you want to know if there's a better option, you can start that Savi application to see. If there is a better option, you can select that plan and enroll, and we'll help get you switched over. Do I have to be on an IDR for PSLF? I like my current payment, but I want to pursue PSLF. So that is a requirement, is that you pay your loans on an income-driven plan. If you make a payment that is not on an income-driven plan, it may not count towards forgiveness. So right now you can get credit for past payments on the wrong plan, but moving forward, payments will only count if made on an income-driven plan. So if you want to pursue PSLF to get that forgiveness, you would need to enroll. That is another benefit of Savi, is that we'll show you what those situations look like. So that way you can see estimates of enrolling in an income-driven plan and pursuing PSLF to help see your monthly payment, your total payment, and forgiveness so that you can compare all those options. Has the PSLF program been overhauled? They have made a lot of changes to help you get credit for more past payments. So because there are so many strict requirements, they have made a lot of improvements to help you get credit. So things like making payments on the wrong plan, or maybe making a late or partial payment. There are a lot of systems in place right now that are helping you get credit for those past payments. So there's a good chance that you could have some credits towards PSLF and may not even know it yet. Start those Savi applications to see what you've got and get an estimate of your forgiveness. I've seen a couple people ask about how this works if you have private loans. So these are federal programs. Since they are federal programs, they only apply to federal loans that are given out by the Department of Education. If you have a private loan, which is from any company or source besides the federal government, unfortunately, those loans don't qualify for PSLF or income-driven repayment. If you have private loans, it may be beneficial for you to look into refinancing to have a lower interest rate, but unfortunately, that is not a service that Savi provides, and all of these programs that we help you enroll in are for your federal loans. Next, great question. Who do I send the paperwork to at my employer to get signed? So one of the benefits of Savi is that we take care of sending it to your employer, getting it signed and submitted. And because we are working with the University of Kentucky, we know exactly who to send those forms to in HR to get them signed as soon as possible. So if you create your form through your Savi account, we will take care of sending it over to the HR office, getting it signed and submitting it for you. Next one that I see a lot of people are asking about is Savi a loan servicer? So in this question, they say, my loan servicer is Mohila. Does this mean that Savi will be my new servicer? So Savi is not a loan servicer. Instead, what we do is we work with you and your loan servicer to find all the available options and enroll in whichever one will benefit you the most. So you will still stay with your loan servicer. You'll still make your payments to them. The only thing with Savi is that we will help compare all those options to help you enroll in whichever one gives you the best option. And then we take care of submitting all those applications to your servicer. Do employers only count after I've started paying all my loans? Yes. So the way that PSLF is set up is you have to be working and paying on your loans. Once you have made 120 payments on your loans while working, that's when you qualify for that forgiveness. So if you were working before you started paying on your loans, unfortunately, that time won't count since you weren't making payments. Only the times while working and paying will count. What if I am retired? So if you are retired, unfortunately, you won't qualify for PSLF. Because of that requirement of needing to work and pay, if you are retired, you wouldn't qualify for forgiveness. In these cases, your next best option is typically income-driven repayment plans, since they have that forgiveness after you've paid for a total of 20 or 25 years. Also, with those income-driven repayment plans, if you have a low income or no income, you may be approved for a $0 payment. This is beneficial because you won't be required to pay on your loans each month, but you'll stay in good standing and continue to earn progress towards that 25-year forgiveness. So if you're retired, we would still encourage you to start the Savi application so that you could enroll in an income-driven plan and have a low or even $0 payment. I was on Repay and now I've been moved to the Save plan. Do I need to update my income? So because the Save plan is brand new, they actually replaced one of the existing plans called Repay with the Save plan. For everyone on Repay, you were automatically moved to Save and had your payment recalculated under the new plan. If this applies to you, you do not need to update your income and you will still be good to go once those payments resume. Your servicer will let you know what your recertification date is. That way you know when you need to update your income. If I was in an in-school deferment, can I get credit for those times? Unfortunately, deferment periods like an in-school deferment won't count towards PSLF. Only the times where your loans were considered in repayment will count towards your required 120 payments. Savi says I need to consolidate. What is the purpose of this and what are the next steps? So for PSLF, you are required to have those direct federal loans. If you don't currently have direct loans, you'll need to consolidate, which means converting your loans to direct. If you need to consolidate, this is done through the Department of Education's website, and Savi helps walk you through this process and helps you consolidate those loans. You'll consolidate them so they convert to direct, and once you have direct loans, we will pick up and be able to get you enrolled in those programs. If you have any loans that need to be consolidated, we will help you with that. So if you have FFEL loans or Parent Plus loans, we help get those consolidated to get you on track for forgiveness. What documentation do I need to enroll in an income-driven plan? That depends on your situation. For most people, it's a tax return. For others, it may be a pay stub or a letter explaining your income. But by working with Savi, we will help let you know exactly what documentation is needed and help you get that attached to your application so that you can enroll. If I defer my loans, will I still be eligible? So if your loans are deferred, those deferment periods don't count towards forgiveness. But once you start making payments again, you can pick up and continue earning progress. Once you've made a 120 cumulative payments on your loans, that is when you'll be eligible for that forgiveness under PSLF. Follow up to that is what happens if I switch to another employer? Do all 120 payments have to be at the same employer? They don't. So if you have multiple employers, all you'll need to do is turn in a form that is signed by each employer. That way you can get credit for all your past payments. So 120 payments is a lot to make. They don't have to be consecutive, just cumulative. It's okay if you have some maybe deferment periods in there or some periods where you weren't paying. Once you've reached that 120 cumulative is when you will qualify for forgiveness. A couple questions about how tax status affects payments on an income-driven plan. So if you are married, your tax status does affect how your payment is calculated. If you're married and you file your taxes separately, only your income will be used when calculating your payment. If you are married and you file jointly, both you and your spouse's income will be used to calculate the payment. This is because when you file jointly, your incomes are merged into one number, which is your adjusted gross income. So if you're married filing separately, just your income is used. If you're married filing jointly, both you and your spouse's income are used to calculate your payments. But if your spouse has loans of their own, this is taken into account. That way, the Department of Education can recognize some of your income will be paying on those other loans, and typically this results in a lower payment for both you and your spouse. If I'm approved for a $0 payment, does interest continue to accrue? Yes. So interest will always be accruing on your loans. And enrolling in an income-driven plan does not affect your interest rate. It's just changing the amount per month that you're paying. Typically, if you are pursuing forgiveness, it's okay if that balance isn't going down because once you've made that 120 cumulative payment, whatever's left, including interest, is forgiven. So it is possible that you could enroll in an income-driven plan and have a low payment and your balance isn't going down. That's totally okay since that balance will be forgiven down at the end of the line. And it looks like someone is having issues with the QR code. So I will get that link for you and I can send that in the chat. That way you can get signed up. So if you'll give me just a moment to find that link for you all, I can get that pulled up.
Thank you, Job. Are there any additional questions that you guys want to add to the chat in our remaining time here together? I can also send the QR code in the follow-up email.
And I just sent the link in there that takes you to the sign up website as well. I see a few more questions that pop in. If for some reason you have a question I don't get to, we encourage you to start those Savi applications, start seeing what you qualify for, and don't hesitate to reach out to our support team. A few more follow-up questions. Is the $60 fee one-time, annual, monthly? That is an annual fee. So that is for our yearly essential membership, $60 per year, and that unlocks all the features of Savi. That way you can get those applications created and get enrolled and on track for forgiveness. What if I'm not going to work in a collegiate setting for 10 years? So we encourage you to go ahead and get credit for payments that you have right now, since you never know what could happen in the future. Once you've gotten credit for a payment, though, that will be locked in and stay on your account. So we encourage you to just get credit for what you have, get on track. If for some reason you end up not continuing to work in public service, you would stop accruing credits for PSLF, but you could definitely stay enrolled in those income-driven plans. And last few questions before we run out of time. Do I have to remain a member of Savi once signed up? You don't. So there's no contract, no commitments. We can help you see what you qualify for, but you are not obligated to stay with Savi throughout your forgiveness process. So if you enroll, see what you qualify for, get on track, you aren't required to continue with Savi. Alrighty. I don't see any more questions. I don't want us to run out of time, but appreciate you all letting me come and speak to you. If you do have any other questions, I encourage you to start those Savi applications, reach out to us, and we are always more than happy to help out.
Jobe, I see one more question. Are you able to answer this one at the end here?
Yes. So the payment pause does count towards forgiveness as long as you continued working. So you can get credit for these months right now. If you defer your payments for 6 more months, that 6-month period of the deferment won't count. The payment pause is the only time where pause months will count towards forgiveness. Other than that, you need to be paying. So in this specific question, you can get credit for the 43 pause months. Your 6 months of deferment won't count, but then you'll pick up and continue with the payments that you already have. Will there be taxes on PSLF after 2025? No. So PSLF forgiveness is tax-free permanently. No matter when you receive that forgiveness, it is not taxed. Income-driven forgiveness, which forgives your loans after you have paid for 20 or 25 years, will be taxed starting in 2025.